Evening. Welcome to the ShadowTrader Video Weekly for Sunday, March 9th, 2008. This week's video, I'm going to get a little bit deeper into the pivot point discussion that was last week. We talked about some intraday support and resistance levels and how I use them. We'll continue on with that this week, get a little bit deeper into that. I'll show you how you can apply it towards longer term trading, which is what I'm pretty sure most people out there are involved in, since most people don't day trade actively. So we'll get to that in a second. Before we do, let's have our usual rundown on the majors, as I call them: S&P, Dow, Nasdaq, NDX, Russell, etc. S&P, we're expecting this week a move down to 1270. Reason being, that's the prior 2008 swing low. Obviously, we're not going to come this close and fake out. The question is, what's going to happen at the 1270? Remember, bottoms are often quite complex, so to speak, and many times what you'll see is probes below, maybe as low as in the 1250 area, and then hard rallies up, because what happens is that this is a phenomena that I call coming from the top. You can either call it coming from the top or coming up from the bottom, and what it means is when a market comes down to a support point, as you can see here, filling up the triangle at the 1270 S&P. When a market comes down to a support point, all right, a lot of people are shorting here, expecting that it's going to break down heavy, and people make this mistake intraday all the time. They look at stocks where, you know, there's like it's coming into 230, for instance. Stock's been down all day, and then they short it late in the afternoon, and the breakdown is not really very, you know, it's just a minor breakdown, and then it rallies. If you look at the intraday action actually of Friday, I just remembered that it was actually exactly that, right? The market was selling off heavy all day long, and you probably had a lot of people shorting here below the lows, which did bring in some profits. But notice that as soon as this 230 reversal period hit, you had this snapback, and it turned out to be, you know, kind of an unsustainable move, so to speak, under the lows. So that's excuse me, from an intraday time frame, this is what it would look like on a longer term time frame. And again, the reason for this is psychologically and technically is simply because the market has already come down too far. It's come down from the top, as I call it, meaning from the top here, you already had 1, 2, 3, 4, 5, 6. It would be the 7th day, you know, of this move down. And that's just unsustainable. Basically, markets move in odd numbers. You have like 5 days down, bounce, 7 days down, bounce, 9 days down, bounce. You'll have it grouped in odd numbers like 3, 5, 7, 9, etc. So that's one of the reasons why I think that this area is going to be key at the 1270, that there could easily be a bounce here, or there could, which when I say a bounce, I mean a bounce immediately upon touching the 1270, or a breakdown through and then a heavy bounce. We have no way of knowing if it's a heavy bounce. It's going to take us back into the 13s here for a snapback. Who knows? But it's just something to be aware of, that as we come down after 6 days of selling, when what's going to happen right about here is that the news is going to be screaming at you. CNBC is going to be all over this and saying new lows for 08, new lows for 08. But trust me, that's not the time you want to be short. You know, that's why basically one of the tenets of technical analysis is that you want stuff to go sideways at the lows at the very best, and then short it to show that there is no bounce and that there is enough time to sort of digest it. A chart that comes to mind that I've been looking at recently is Bidu, right? Look at Bidu.com on a weekly. Okay, see how you slammed into the lows, but once you slammed into the lows, you didn't bounce at all. All you've gotten is this, symmetrical triangle forming like so, right? And you haven't had any meaningful bounce that's held. Okay, so basically, shorts here into Bidu have gotten very frustrated. But what's working for them is the element of time, right? Is that although Bidu has come down from the top, right, meaning that you had a huge move for like 3 weeks straight from 400 down to 230, where the stock was cut by like 40% basically, right? Right. Notice how hard it bounced. It came up here and then since then sideways. This is the type of pattern is what I'm looking for, as opposed to this to short. See, when you're coming down from the top, see this, like, interestingly enough, you came right to a trend line support. A lot of traders, they're not really looking at this. They don't pay attention to stuff like trend lines. They're just thinking, oh, well, we lost the prior swing low, I should be a short. But then notice that it doesn't really work out that well, right? You get a big rally because basically, prices can only move so far in one direction before that side of the battle gets exhausted. So the sellers run out of bullets, and you get a little bit of a bounce, and it kind of scares all the shorts away, and then it needs time to kind of digest. So that's what I think may happen in the SPX as we come into this week. So be very aware of that. On the weekly, there's some congestion here. There's a 200 MA. We'll see what happens. All right, let's talk really briefly about the pivots. I want to show you guys just how to set this up on your intraday charts while I still have a couple minutes here. ESH8 is the ticker here. That's the March futures contract. Be aware that this week is the rollover week. After Wednesday, you're going to have to go like this, ESM8, because it goes HMUZ. So be aware of that. Remember, the futures contracts go HMUZ. And what that means is this right here. This is January to March, and this is April, May, June, and this is July, August, September, and this is October, November, December. So that's how this stuff. And what I did is I want to point you guys to something that I just set up on our website that can help you with this. Because a lot of people have emailed and said, well, you know, what high, low, and close do you use? What numbers do you use to calculate the pivot, the formulas, or whatever? So I figured we'd put a little thing on the website because Brad talks about this stuff a lot, gives out the key levels in our broadcast every morning, which is free and live on the Thinkorswim platform. Check that out if you haven't yet. You know, and I look at this stuff on an intraday basis as well. So I thought it'd be good to bring it into the website and show everybody the exact numbers I use. So what you want to do is you want to go to ShadowTrader.net. And when you're on our homepage, click on the tab that says About Us right here, and then go to our glossary, and then go down to the P section for pivot points, and then you'll see I put an explanation there of what all this is about. Oops, there we go, P, pivot points. And I also put the formulas for you guys that are used right here, pivot, R1, S, resistance 3, all in here. And most importantly, I put a hot link to the CME site for the settlement prices. So when you click here on settlement prices, it takes you directly here to the CME group site right here. And the first thing you want to do when you get here is make sure that you're here late enough in the day, usually like a couple hours after the close. You can see here it says 7 p.m. Central, which is 6 p.m. Eastern, as of 3/7, which is Friday. So you want to make sure that you have it should show you the prior day, which is where you want the data from, after the close. Okay, so you can see here it says Friday as of 7 p.m. So obviously these are the right numbers. And the ones you want to use are these right here. You need your high, you need the low, and you need the close. But very importantly, don't use the last. Use the set. Use the settlement value right here. In this case, they're identical, but usually they're not. Okay, so use your high, low, last set. Keep an eye on these numbers here, and you'll see that I just simply punch them into an Excel. There's the numbers you just saw on your screen from the CME site, right? I've labeled it close here, but it's set, basically. All right, and that gives you, it automatically calculates these. This is a very simple Excel using these formulas here, which again are listed right on our site, okay? And then, zoop, you just go right in and put them in, and I've already updated for Monday morning. I've put in my pivot, I've put in my R1, I've put in my S1. Okay, and that's basically it. Again, as I said last week, I'm getting deeper and deeper into this. It's a little bit beyond the scope of this video to just, tell you exactly how to use these in like 30 seconds because there's a lot more to it than that. So I'm doing it in little pieces. Last week I brought in a little bit of information on the pivots, and this week I'm bringing in a little bit more, and I'm showing you how you can get the formulas on our website and take it from there and sort of slowly ease into it. And eventually I'll do an entire video just on this, okay? So that's it. ShadowTrader.net is where that info's at. Remember, rollover is on Wednesday, so the futures contract's going to move to M instead of H, and that's it. On behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, all the good people in Chicago, after one, the only Thinkorswim. I wish you good trading. Gia, and good night.